Hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly market analysis show. This is for the weeks that starting with December 20, Monday 2021. If you're not subscribed, please subscribe and share it with friends so that it benefits all of us. Thank you. So without wasting time, let's get into the action. So these are the charts and we'll go look at the price actions and the patterns. This is the weekly candle. Let's see. What a week, right? So that's clear bearish wide range candle that you see here on the Nifty and the right side Bank Nifty. Again another wide range bearish candle is what you see. How much did it fall? 500 points lost last week, right? Bank Nifty 1500 points just 1 week as compared to the previous week, right? And it is also a bearish engulfing. It engulfs the previous candle completely. Here little is less, but clear wide range bearish candle, 4% and 3% respectively, barely. Daily candle, if you see, it's a 1.5% drop last Friday, 2.5% drop in Bank Nifty, 17,000 and 36,600 is the support resistance. It's at a good support. So the gap that we had when it shot up from here is lost. The gap we had here is also lost history, and now we are back to retesting the same levels as we had in the previous swing low. So any break from here would mean that we are in deep trouble, and any consolidation that hit means that it's going to last for quite some time. Look at the Bollinger Bands. It's clearly indicating now that consolidation is there on both indices. But the only thing we have to closely watch is whether it will break the lower band, will break down, and the price will slip below. This is also the only thing that you have to watch both sides. If that happens, then you have to check for the Fibonacci 61% on both from the last swing low from this level. Where is the Fib low? 61, and 61 below clearly indicates its bearishness that is going to sustain for quite some days or probably weeks. So that's the Bollinger Bands, and yeah, so Bollinger Bands is showing consolidation, but that consolidation could easily slip into a bearishness. Look at the support resistance zones here, right? We are at a support zone on the Nifty, and we are at a support zone on the Bank Nifty, right? And we have the swing low, which would be the support, final support, and here similarly we have this swing low that has happened here. That would be the final support before you turn fully bearish. So next week is going to be decisive as to if the consolidation is going to continue or would it slip down to further bearishness or not. So watch out carefully these support resistance levels. So 17,000 is a support immediate. That slips, you have 16,900, which is a Fibonacci 38 retracement level, and then 16,700 to 16,750, which is also a gap in a previous swing low. Upside resistance is 17,200 and 300 from where it slipped off. Above that you have 17,350, 400, and above that you have 17,500 and 17,600. That range, which is a major resistance, which is Fibonacci 23 level also. Bank Nifty on the other hand has 35,600 to 35,900, which is the support immediate, and after that you have 35,000 to 35,300 is the previous swing low, which is the support below. If that slips, then you get in the Fibonacci 61 level, very critical, 34,350 and 34,750, that band. If 34,350 is broken, then we have trouble. Resistance upside 36,300 to 36,600, and then after that 37,900 to 37,000 range, and then 37,300, 400. That range is the resistance upside on the Bank Nifty, right? Watch out these slides again. Once again, look back and then make note of these levels so that you can trade properly. Now coming back to the momentum and the trend analysis, Nifty has momentum in bearish zones on the daily and sideways on the weekly. Monthly is intact bullish. Nifty is now bearish on daily and sideways on weekly. Monthly also has slipped in the sideways in the Bank Nifty. So Bank Nifty monthly momentum also is lost. Is the differentiating thing. Otherwise, it's medium term sideways and short term momentum bearishness is what you see as of now. When coming to the momentum divergence as there is a 4-bar monthly reverse divergence which is bullish in nature, but it's a monthly, so it takes time to confirm that, but it's still existing on the Nifty. Bank Nifty, it's no longer valid, but in Bank Nifty you have a bullish divergence that is there right now, right? So that is what you can see here. See, this is the Nifty where you have a monthly. This is a monthly, right? Price is moving up, money is coming down, and this trying to move up. So it takes a lot of time because it's a monthly candle. 1 month's candle takes 1 month to move, right? So you have to be aware of that. But there is some bullishness available in the Bank Nifty. Also bullishness is there because you can see that the price is coming down and the momentum is going up, right? So that is bullish reversal signature. So both have, but that is on the daily. The short term Bank Nifty can catch up, and the long term Nifty can also catch up. Is what the divergence in the momentum is indicating on both the charts at different time frame levels. Make a note of that. Trend is in the short term bearishness. You can clearly see day and negative dominating, day and negative dominating Nifty and the Bank Nifty. VIX is the chart. This is the chart of the VIX. VIX was flat more or less. It was just 3% up. Right? 16.3, the lower level of the range is maintained, and implied volatility is 16.1, and HIV is above that, 18.7. IVP is they shot up to 55 kind of levels, and now still at 48 levels. So the VIX is still between the 15 and 20 kind of levels, hovering up and down, right? And it has cooled off since last many weeks, and then last week it was flat, you can say. Open interest analysis are on the Bank Nifty futures is showing that it is short build up on both Bank Nifty and Nifty, short build up. But in the options data for 23rd expiry showing that 18,000 is a major resistance, and after that highest resistance is in at 17,300, while the support is in at 17,000, and then 16,500 also has got a lot of put trading. Bank Nifty on the other hand, 37,000 and 36 both have good call trading, let's say resistance zones, and then 36,000 and 35,000 both have good put trading. That means it's a support zone. Put call rate is bearish because 0.49 and 0.49 is what is indicated. 447 actually on the Bank Nifty. So VIX we already seen the volatility is within the range of 15 and 20, and it was flat last week, and there is good likelihood that it can go up to the 20 levels back. So there is a mean reversion possibility. That means Vega positive can be strategies can apply on the option. That also means that there is a probability that Bank Nifty can means indices can fall also. When mix moves up, indices fall. So this is what the December 23rd expiry next Thursday weekly. This is the openness data that we are talking about. 17,000 is crucial. Whether it will able to hold on there or will it slip to the 16,500 below. Similarly, this 36,000 is very crucial. Whether it's able to hold that, or would it fall back to the 35,000 levels or not. That is a crucial thing that we have to see in the next week. Now let's look at the sectoral industry sectoral watch. IT is only sector that moved up last week, 2% up, closing green. IT is because of the dollar increase, it will benefit, and it is short up. But still the amount of short term is sideways, but medium term it is bullish. So just a little more, you have to wait for the short term daily candle also to show the bullishness in the momentum, and then you can go long. It's a defensive sector, IT and IT basically. So look at all the other sectors. FMCG, metal, auto, pharma, realty, all of them are down, deep down. FMCG 4.5% down, realty is 5% down, pharma is 2% down, auto is 3.5% down, at least 3% down. This is on a weekly basis. All of the momentum is sideways or bearish. In the medium term, it's also sideways. So just try to wait for the momentum in the daily to catch up on all of the sectors. So across all the sectors activity, there is bearishness. There is sideways movement is what the momentum is indicating on the. So we have to wait for the sideways momentum to move before we can pick up any structure is strong. Institutional participation is again Fyers is selling 1,450 crores again. Previous week also similar range was sold. DAS buying is reducing. It is now 66,360 crores of buying that happened, but the difference is what market fallen down. The longs on the derivative also slipped last week. Right, institutional longs. Now, looking at the global markets, last week mid we had a Fed meeting, but US market shot up after the outcome for some reason, and then it cooled off. And all the indices, Nasdaq, S&P, Dow Jones, all actually closed red last week, 2% down. And dollar index is closed green at a short of 0.5% nearly, right, on a week basis, and it is after breaking out from the major resistance, two major resistance zones, and looks like it's heading to the upper resistance up there. So right now it is at 96.7 levels, right? So dollar is strengthening like anything. And USD INR currency pair trade in the energy, if you see, it's 1% up. It has shot up to 7. It looks likely it was heading towards the 77 COVID wave 1 levels, and it cooled off at some time, and it is right now at 676 level. But 76 rupees for a dollar is clear indication of rupee weakened to the core, and that's not good. Crude oil, while it's good for our economy, it's cooled up a little bit, but it's maintaining the 70 levels after it had dipped to 75 kind of levels previous weeks. Okay. So dollar strengthening, rupee weakening is worrying. Gold, meanwhile, has shown green. It you can see that this is a crude that has cooled off and in the weekly level, and gold, which is a cup and handle pattern, was consolidating at this level. So even now it is consolidating, but it is showing some attempt to once again attempt this resistance to be taken out, but otherwise it is sideways overall. Long-term basis is bullish. That's a global commodities and topics. Two bearish short portions by that auto. Resistance M pattern is gone, and it is at a support zone, and take short portions if this support is broken. Go to the daily time frames, it is broken, and it can at least target for this next support zone, and then trail accordingly. The reason is momentum is on the weekly basis bearish. Daily basis is anyway bearish. Volumes, big red candles, volumes dipping, trend dipping, momentum dipping on medium time basis. So, and patterns are clearly showing bearish. So there is further more juice left for us to capture on the short side. In this, an Unilever seems to be breaking the channel on the weekly basis. Momentum is bad, trend is bad, very thin volumes, and patterns are showing that it may be breaking down further. Right, so with tight stop losses, you can play it on a swing or positional levels on the short side, both of this, right? In the swing Unilever and a lot of good stocks, but when the market goes down, good stocks goes down as well, even more. Right, so this is the strategy. It's a bearish vertical spread. It's bear put spread, and you sell these higher strike put 17,000 put, and then lower strike 7,300 put. Actually, higher strike put you buy, and lower strike put you sell. So it's it's not a credit strategy; it's a debit strategy. But the benefit of this is that if the market is falling down to any level, we will be safe for the next week, right? Next 4 days, 5 days, if it is 4 days, if it is breaking down or consolidating, as long as it does not go up above the 70,100 level, we are safe. That's a view, and reasonable risk reward. Max profit was good, and probability is right more than 60, and it's safe. Assumption, the view is of course moderate bearishness, and it's not expected that it will once again cross 7100, where it had fallen up heavily. No, it is, so another attempt may not be likely. It may be consolidation or a further breakdown, either of that. Now, just to wrap up the weekly view, the market view for the next week is extreme. The market view is not extreme. Market view is moderate bearishness, but last week was very bearish, extreme bearishness. Like 3 to 4% of big falls, and 1 day 2.5% fall. Consistent fall from the Monday, Tuesday, from onwards to Friday. The momentum short term is bearish zones, medium term also sideways. Bollinger Band showing draw levels, resistance, medium term, the moving average resistance, all of this, right? And along with that, the Fyers are selling heavily. So that's reason enough for a moderate bullish view for me. But there is also a possibility that markets can take support at the previous swing low level and then again bounce and then may not go further, but it will make another attempt and then below the moving average level then consolidate further. That is possible, as Bollinger Bands is indicating. It is also possible, but chart patterns, momentum trend, and Bollinger Bands and DeFi selling indicate that it is moderate. Time for moderate. It is a mistake here. I'm extremely sorry. It is moderate bearishness. Let me correct this right away. Sorry for that. Right. Very important to correct this. Sorry for that. So that's moderate bearishness is my view because of all the reasons. And India weeks is at the lower range. It is a possibility that it can shoot up to the 20 upper range, mean reversion of that. That also indicates probably the reversals can happen. At this volatility level choppiness, there is still 1% scope for further volatility. Code off also is possible. So you never know. But volatility moves up, market falls down. Right? So always use vertical spreads, and calendar spreads also may work with the Vega advantage. Right? So anything above 20, stay out of the market. And as I've been telling the last several weeks, that this is a time for picking up good quality stocks for long-term investing. Market size change is what you are right now seeing. We had a very big rally that happened for several months now, and now we are shifting into a sideways zone. We don't know whether it will shift further into a bearish zone. So it's a transformation phase. So our strategies, our diversification techniques, the investing strategies, all of this has to get adapted to how the market is keeping on changing its nature. Right? That is the only way to survive in the market. So I hope it's clear. And hope this helps you to form your own view on the market for the next week to trade and help you to plan your trade, set up your trade plan well. If that helps you in any way, consider hitting the like button and share it to your friends and colleagues so that we have very few subscriptions, and I look forward to have more subscriptions to keep doing this on a weekly basis. Thank you so much for your support. Thanks for being. Happy trading and happy learning. Bye.